think investing in the Tata AIA life insurance smart value income plan give you long-term financial security and financial stability in life? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So this is the individual non-linked participating life insurance savings plan. Some of the key features of the policy are there are two sum assured options. There are two plan options as well, and there are multiple options to choose from as your policy term and premium payment term. You also have a life protect feature in this policy where you can skip your premium cover if you need to postpone premium payment due to loss of income or unemployment. The life cover continues even in such cases. So these are some key features of the policy. Now let us take a look at benefits. So we have death benefit, survival benefit, maturity benefit, all which differs based on the plan option you have opted for. So if you want to know more about it in detail, you can refer to the policy brochure. The advantages of investing in this policy is under the various premium payment options, you can choose a policy term of up to 100 years or else you can choose a limited period of 10 to 50 years. The survival benefit will also be paid out on survival of the policyholder till the end of the policy term, and the policyholder has flexibility when it comes to choosing their premium payment mode. The policyholder also has the option to receive their cash bonus in hand or in a sub-wallet. Riders can also be attached to the base policy at any time or on the policy anniversary during the policy term. Loan option is available with 80% of the surrender value. The premium offset feature is available both in regular or limited pay, and if the cash bonus value is higher than the premiums to be paid, then the excess amount will be paid out to the policy holder. If it is lower, then you will have to pay the remaining premiums. These are the advantages. Disadvantages are all your cash bonus and terminal bonus or non-guaranteed benefits. So these bonuses are not uniform all throughout the policy years, and in the case of survival benefit, which is your cash bonus, it may not be sufficient to meet any big ticket expenses of yours, and the sum assured is also too low. In case of death, the death benefit may also not be sufficient to meet any future financial goals of yours. So these are some drawbacks that you need to keep in mind before deciding to invest in this policy. Now, as we have seen the features and the policy options and have a basic understanding of this policy, to decide the suitability of this plan for your requirements, we may need to know its cash flow in detail. That is why we are going to conduct an analysis of the internal rate of return of this policy to help us make an informed decision. We are going to conduct this analysis based on the benefit illustration given in the policy brochure. So let us first assume there are two policy holders who are going to use one is going to use the option plan 1 and another is going to use the plan option 2. So here both the policyholders are 30 years old and they have opted for a basic sum assured of 12,50,000 and they are going to pay an annualized premium of 1 lakh. The premium paying term for both is 8 years and the policy term is 40 years. The only thing which will differ is the plan option they have opted for. The first policyholder opted for the option 1 cash bonus and second policyholder opted for the option 2 accumulated cash bonus. So we can see how both the plan options work under the same circumstances. But to calculate the IRR fund under the policy options, how we are going to calculate it based on two future assumed rate of return like 4% per annum and 8% per annum, just to give you an idea about how this policy can perform in worst and best case scenario. As you can see under the option 1, the IRR comes to be around 3.23% at 4% per annum and 6.30% at 8% per annum. And under option 2, at 4% per annum, the IRR comes around 3.39% and at 8% per annum, the IRR comes around 7.01%. So under both options, does not seem to provide the policyholder with inflation beating returns in the long run because the IRR itself ranges between 3 to 7%. And this rate of return will not be sufficient to fulfill your family's financial dreams. So these returns are not favorable in the long term. Moreover, the sum assured guaranteed on the death of the policy policyholder is also very meager compared to other policies in the market. So as we know that this policy is not giving us a desirable outcome that we need, as an investor or as a policyholder, we have to look at some other alternative to get a better return on our investment. So let's assume a similar cash flow as in the option 2 accumulated cash bonus and keep the annual premium of 1 lakh to be invested in an alternative investment strategy where we are going to separate the components of insurance and investment. So instead of investing in a policy where it combines both, we are going to invest in pure term insurance policy separately, and the balance amount can be utilized for accumulating the corpus for our financial life goals. So let's look at how this strategy works. So let's assume that Ram considers buying a pure term policy and investing in an ELSS with a similar cash flow of 1 lakh for the same period of 8 years as an investment. The annual premium for pure term life insurance is 28,000. So he allocates the remaining amount of 72,000 to invest in ELSS mutual funds. So here the annual premium out of that amount is only the balance amount is going to be invested in mutual fund, because in ELSS fund, if you take a look at it, if you invest it for more than like 7 to 10 years, it has even outperformed its average return of 12% in certain cases. So even with risk, as it has a good track record, we have opted for investing in ELSS mutual fund for the same time period just to see whether it can give us better returns. As the premium payment term for the pure term insurance policy is only 5 years, for the first 5 years only we are going to invest in ELSS the balance amount. In the remaining 3 years, considering we have taken the previous example as reference, there was the premium payment term for 8 years. So considering that, we have 3 years where we can allocate the entire amount to ELSS completely for investment. So as you can see in the tabular column, the term insurance plus ELSS combo will provide you with the corpus of 3.61 crores post-tax value and an IRR of 10.92%. This corpus accumulated will help you achieve your life's financial goals with ease, because even in the best case scenario, which is at the rate of 8% of Tata policy, it will just leave you with 1 crore at the end of 40 years. But here it's leaving you with 3.61 crores, which is the post-tax value. And if you want to know more about the in-depth ELSS tax calculation, we have also presented a tabular column for that on the screen for you, which you can pause and see. So what is the final verdict on this policy? Is it worth investing or not? So Tata AIA Smart Value Income Plan offers its investors the dual benefits of life insurance coverage along with a cash bonus. But as per our analysis, the annual cash bonus that we get from this policy will not be sufficient enough to meet our family's financial expenses. Since this bonus is not guaranteed, there could also be a shortfall, as even the accumulated cash bonus option score below the average rate of return. Throughout our research, it is evident that this policy does not provide adequate life coverage and also fails to help us achieve our financial goals. So investing in a pure term policy with adequate life cover will help protect your family financially in case of your absence, and for investment purpose, it would be better to choose a financial plan that caters to your financial goals and risk appetite.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.